A very special guest joins us now, Shiv Puri, founder and managing director of TVF Capital. Shiv, fantastic to have you back and thank you for joining us. Well, there seems to be a crack in India thesis. Our own poll is indicating that the Nifty or benchmark indices in the next 6 months may not go anywhere, and if at all they have to go anywhere, they will go down.
Yeah, hi Nikunj. It's over the next 6 months, I would say it's anyone's guess as to what the market will do. But I think if we look forward on how the market can do over the Modi government's term, I think the upside is much higher than the downside potential. Some of the steps that the government has taken will take time to play out, and I think expectations have gone through a very healthy reset. They should have. A lot of the changes that are being made, is like sort of what a good CEO taking over a company would do. A company that was healthy but going through a troubled phase, and the thing that he would do is take the pain up front. Take the pain on rationalizing rural subsidies. Tackle sort of inflation, the fiscal deficit, the current account deficit, all of these big metrics, and arguably he's had some good luck in it. But I also feel that these are the right decisions for the long term. So leaving the next 6 months aside, I think the outlook over the next few years is optimistic, because the changes that are being made are structural, and what India has always lacked, I think, over the long term is that we are good at running sprints, but we're not good at running marathons. And if this is actually a strategy to run a marathon rather than a sprint, then it's a very optimistic situation.
So much more to speak about, but just a couple of minutes left before we start trading. Do watch out for Tata Coffee, Jain Irrigation and a bunch of other stocks. They could be reacting on their numbers. The volumes are thick and fast in the pre-open as well. Really good going. Shiv, this is Neeraj here from the studios as well. And a trend, Shiv, that we're seeing, you gave your broad outlook on India. A trend that we're seeing this season ever so starkly is that the market is rewarding good numbers despite being in a bit of a slumber mode, so to say. I mean, I've seen, so Jubilant FoodWorks is an example, Tata Coffee is an example today, some of the FMCG firms are examples. You come out with good numbers and never mind what the direction of the market is, but stocks are getting rewarded, they are clocking in fresh highs. Eicher Motors is another example there. What have you made of the earnings season so far, and anything that has stood out for you?
I think broadly the earnings season has demonstrated that we can't look at the market as a whole to gauge what the earnings outlook is. What I mean by that is there are very stark differences in company reporting numbers. For example, you look at the banking sector. In aggregate, probably all the banking companies have not shown any growth. They may have even shown a decline year over year. But if you look at what the private sector banks have done, most of the big private sector banks, they have had very good numbers. Asset quality is under control. Growth rates have been north of 20%. And if you look at the PSU banks, it is the reverse. Same thing that's even happening in the financing companies, that are catering to rural India, let's say. They seem to be doing well, whereas, a lot of other companies in different sectors are not. So I think it's becoming, rightly so, a very bottoms-up sort of stock picking opportunity. You're seeing individual companies that can do well in the current growth environment. They don't need, they're not entirely dependent on very big reforms happening for them to do better. Whereas those companies that, either are catering to a segment of the economy that's weak, for example, infrastructure, or have over-leveraged balance sheet, or need big reforms to get their business moving, those companies are have a while away before I think they can come out of this.
Shiv, last time I distinctly remember when we interacted with you on the 18 Off forum, you were of the view that you would back quality stocks, and my question to you was that quality was coming at a price. Are you thinking your exposure to Asian Paints or Bosch, once again, they're great companies, inevitable franchises, solid businesses, but what about price? What about underlying growth?
Again, without talking about specific stocks, I think the mindset that we have back then, 5 years ago, today is unchanged, and I think it's the right way to do it. Quality is something that not only should be exercised in investing, but even when anybody is going out shopping, they look to buy things of quality. And I think that mindset is important to understand that is the area to focus on. And the fortunate thing about that in India is the other elements that you want to balance with quality, which is growth and duration of growth. In a market like India, you have a tailwind in that sense. So in the West, you have a lot of companies that may be of very high quality, but they can't find more than 2-3% growth no matter what they do. In India, you can find those kind of opportunities, and therefore, one has to, the price, the valuation of that, to answer your question, is very different when you have duration of growth coming in. A company that is growing earnings at 20%, let's say for 2 years at 20% ROE, has a very different valuation from a company that is growing at 30% or even 20% for the next 5 years at 50% ROE. And to find that kind of growth, very few markets offer that, and therefore these kind of stocks command premium.
I just want to check on what Corporation Bank as well is up to. Remember, some of these earnings as well have stood out pretty well, and Corporation should come up for you on your screens right now, and that should be reacting to its earnings. Corporation Bank, it's holding up very smartly, 2.5%. Can't say the same about a J&K Bank. Disappointing set of earnings, and that's the next stock that should be up for you on your screens. Well, look at the deep cash that is coming in, 5.6% lower for J&K Bank.
Look at Lupin as well, Asha. I mean, while we're talking about stocks that are gaining on good numbers, this one didn't clock in the best of quarters, but some buying seen at 1600, touched that mark, and now at 1717. At the high point of the day is Lupin now, 2% higher. So the last 2 days, our trading calls on Lupin have been spot on, which is actually a really good sign. And Shiv, we're talking about market-leading sectors. Pharma, probably is still the leader of the bull market, presuming that we are still in one. And it's a sector that's corrected quite severely from the top. I mean, 15 to 20% as the case may be. And now we're seeing a bounce back in a Lupin, in a Natco, and a few others. Are you bullish on the pack at large?
I think pharma has got a very bright future, and I've said this before as well. If you take a step back, I think pharma today is, where IT services was for India when IT services was about to begin on their big growth for India. The chemistry skills that have been honed in India, I think, are world class. Israel had done this and built several, $20, $30 billion market cap companies. It is, I think, India's turn now, and the opportunity set for pharma, I think it's a 10-year story, and I don't think that there is much that should go wrong. I was listening earlier about the currency weakening and potentially that being beneficial for the exporters. That's true, and I think that will happen. But that is a small subset of what I think the big sort of 5-10 year story, which is that you're going to see a lot of very big pharma companies coming out of India that will be on the world stage.
Well, lots of earnings reactions coming in, and Shiv, the other trend one has seen this time around is how some of these PSU banks and the smaller ones have managed to outperform. The asset quality is improved at a time when up until last quarter no one even wanted to go near these PSBs. What in your view has really changed, and do you think it's now to change your investment outlook towards PSU banks?
I think the PSU banks have a lot of work still to do. Valuations aside, some of them might be cheap on a price-to-book multiple or a price-to-earnings multiple. But I think structurally, the sector is still handicapped, and it has its competition, which are the private sector banks, are only increasing the intensity and gaining faster and faster market share. So if you look at where the market share of private sector banks today, it's about 25%. But if they continue on the current trend, in 10 years, they will have more than 50%. So the PSU banks have a huge challenge in front of them. Aside from the near term, which is on the asset quality, I think even with things like digital banking and technology, there's a lot of work that needs to be done out there. So for them to move to the quality bucket is going to take a lot of effort. Near term, if they get their asset quality under check and credit starts growing, there can be some increase in short-term value. But long-term structural issues are very severe.
Closing comments from you. Give me a flavor of your portfolio. Assuming that your portfolio has a minimum 3 to 4 year shelf life, what do you own in that portfolio? What are you selling? What are you buying? And where is value in this market?
Again, I mean, our views are over multiple years, and I was just recently in the U.S. for Warren Buffett's Berkshire Annual Day, and I wanted to mention that some of the outlook towards India for clients over there, for other FI allocators out there, is still incredibly optimistic. I think the short-term people are concerned, but I think the long-term outlook is remains optimistic. And yes, there is a greater understanding of the Indian market today, where basically people want to focus on companies in the financial services sector, for example, the private sector companies out there, in pharma, in IT services, and in domestic consumer. And I think these are the areas that will continue to do well in the years to come.
All right, Shiv, so good having you. Thanks so much for taking the time out and giving us your view, and look forward to have you more often on this forum.
Thank you. Thank you for having me.
That's Shiv Puri with his thoughts on the markets, the global markets,